Okay, group 2, what you have to do, close down all the revenue accounts, close down all the expense accounts, close down all the dividend accounts, and fourth one is find out net income. Net income formalized revenue minus expense, okay? So I'm gonna give you 15 minutes to do that. This is the individual assignment, but I want everyone to participate with one another so that you can have the same answer, okay?
Okay.
Okay, so if you have the picture, please share it so that when you are discussing, you can have discussion. Any one of you who has the picture, please share screen.
I took it on the phone, so you can share.
Okay, okay, no problem. Okay, I'm gonna give you 15 minutes to do that, and after that, I will be closing down all the breakout rooms, okay? Okay, guys, so I just closed down the breakout room. So, so how we are going to close this question? So there are three kinds of closing entries: closing revenue, closing expenses, closing dividend. So let's talk about this. First, we need to close the revenue here. So closing down all the revenue accounts. Here we go. So do we have revenues here? Locate how much revenue we have. We have a service revenue here. Yes. And then we have interest revenue. Do we have any other revenue here? No. Okay. So it means we need to close down the entry would be service revenue, interest revenue to retained earnings. Why? Because when we recorded this service revenue and interest revenue, we already make them credit. So we need to make the entry closing against the retained earning. So retained earning would be in a credit. So they would be now changed to debit because we need to close down. That would be service revenue, interest revenue. Total amount is 64,600. Right, everyone? Mensu, Sipade, Arone, Min, right?
Yeah.
Right.
Well done. And then closing the expenses. So where are the expenses? We have depreciation expense. We have income tax expense, right? And we have administrative expense, selling and administrative expense. Do we have this accumulated depreciation expense? No, this is balance sheet item. This is not expense, okay? Cost of goods sold, yes, this is expense because this is a part of income statement. Cost of goods sold, which means what are the cost of those goods that are sold? That is our expense. So when we record these, so these were debited, all debited. Now when we are closing this, we need to make a reverse entry, so we will make them credit. So against retained earnings. So retained earning to cost of goods sold, selling, general admin expenses, depreciation expense, income tax expense. And when you add all these, the amount going to be 50,800. So you can match your answer, right? So one thing you can do, write down your name on this activity and take a picture, send it to the group. Okay? So are we clear about this? Sipade, Min, Arone, Chloe, right? Junpyo, Misha.
Yeah, it's clear.
Yes.
And then we need to
Yes.
close down the dividend. Here we go. When we record the dividend, dividend would be debited. Since we are closing, it would be credit. Credit against retained earnings. So retained earning to dividend. And how much is our total income? So we have total revenue. You can find out through the entry as well. See? These are the expenses, 50,800. 63, sorry. Total revenue, 64,600 are the revenues. Right? And net income is like this. Right? So how we calculated the total expenses, you see? Here we go. One question that should pop up in your mind, we treated dividend as an expense, but it's not here in the total expense. Why? Because we have a separate treatment of closing dividend, because dividend is not deducted from the income. It is deducted after the net income. Here, minus dividend. So dividend, the treatment of dividend comes after we calculate the net income. So it is not a part of net income activity. Understand?
So after the income statement,
What?
after the income statement, we do we calculate the dividend.
Yes. Normally dividend is given or some pay ratio is given. For example, you paid 50% of the income as a dividend. Then you can find out, okay, 50% of income is like that dividend. Right? So some question need to calculate. Other question, we already mentioned that. Okay, any more question?
Yeah, where do we put the dividends when we journalize it? How do we? I'm trying to formulate the question. Could you go back one slide, please?
Okay. Here we go.
Yeah. So here, where would we put it in the debit? How do we classify it as debit? It's not an asset, right?
No, it's not the asset. Dividends are payments to the owner. Right? After 1 year, your owners, which are the shareholders, expect some kind of return. So dividends are how much the business shared from its profit to its owners. We call that dividend. If you pay dividend, the entry would be pay dividend. Pay dividend cash decrease, dividend to cash. For example, 600. Right? And when we close down, the entry would be dividend must be deleted. Then how we can delete that? We cannot just cross it. No, we need to make a reverse entry. And that reverse entry would be, so here it is debited. Now here it is credited. So debit, credit cancel each other here.
Okay, so here it's like paid. Okay, close the account. Okay.
So that's why we call this close.
Yeah, right. Makes sense.
In accounting, we cannot just rub it, or we cannot delete it, or we cannot just remove the page from the books. No. If we want to remove, we need to have entries. If we want to close, we need to have entry. If we want to adjust, we need to have entry. Okay?
Okay.
Okay, if this one is, if everyone is cleared right now, and let's take a break for 15 minutes, okay? And then we start again. Okay, welcome back after a short break. Okay, so let's move forward. We have another question which says, prepare T accounts for retained earnings to show the December 31st, 2014 balance of retained earning. So what you have to do, you just put these entry, which we just created, these entries. So we see when you close down the revenue account, so retained earning account is credited. When you close down the expenses, then retained earning account is debited. And when we close down dividend, the dividend is also, sorry, and the retained earning is also debited. So when you make the T account for retained earnings, it's like that. So the retained earning is debited against the expenses and dividends and credited against revenue. So we have this 5,200, which is the opening balance of retained earning from 31st December 2013. And here we go. This is the balance, 18,400. So this balance will go to the balance sheet. Here we go. Yes, this balance will go to balance sheet. And now classifying assets and liabilities based on their liquidity. So liquidity means how much or time or how fast you can convert anything into cash. We call this liquidity. So cash is the most liquid asset, and account receivables are relatively liquid because cash collections usually follow quickly. So account receivable are also liquid assets. Why? Because they take less than 1 year to convert into cash. You can allow any customer to pay you back in 30 days, 40 days, 50 days, 90 days, right? But you will not allow a customer to pay you after 360 or 365 days, right? Here we go. Similarly, inventory is less liquid. Why?